Today, we're going to talk about digital banking and beyond, talk about what the value of personalization is. Today with me, we have Marco Folcia, PwC partner and EMEA Payment Center of Excellence leader. We have then Enrico Lodi here with me, CRIF Managing Director. And then myself, I'm Claudio Cungi, I'm Strands Chief Product and Marketing Officer. And the session is going to be recorded, so everybody that is connected today, acknowledge this session being recorded. So, first of all, before starting, I would like to have a special thanks to all the entities that have contributed building this report. This report has been a one-year journey together with PwC, of course, first of all, that has supported us as Strands in building this report. We have then, first of all, financial institutions that have been supporting us actively, like Agbank, STEP, and Bank of Georgia, that have contributed actively, supporting also with their evidences. We would also like to thank CRIF as, of course, being our mother company building this report. And then the report has also been built, also thanks to the contribution of several decades of institutions we have been interviewed, but that, of course, have decided to stay anonymous. I would actually leave the stage now to Marco here with me, so that you can talk and give us shed a bit of light of what actually is PwC point of view on what is the market doing and which are the greatest challenge in customer engagement and open finance.
Thank you, Claudio. Thank you, Enrico, and thank you, Strands. PwC is absolutely honored to support you in drafting this report. Let me start with a couple of numbers. I mean, today, 90% of retail customers and 86% of businesses currently use digital channels. So, generally speaking, the point for the banking industry, financial services in general, is no more to address digitalization, but the focus is related to how to customize the experience for customers and to have better customer, more loyal. So that's why PwC decided to support Strands in drafting this report on insight-driven customer engagement. This topic arises from growing relevance of the data as an enabler for banks and for financial institutions to understand the behaviors of the customers and the information collected from various touch points and from the technology that enables to collect data through APIs, open banking, and so on, give a great opportunity to banks to really create new values through bespoke services. Keeping customer loyal become a key success factor, and for this reason, the players have to consider four main trends. Competitive arena, where we have fintechs as a service model and partnership that nowadays are reshaping the idea of how to compete in the financial services industry. Changing of the customer needs as anticipated will require more customized service, more related to their lifestyle and the value that could be expressed on a specific experience that they want to do, and they also learn from other channel and other digital experience. Technological evolution that allows financial industry to retrieve information about the customers and more data on the customer base with respect to the past. So we have the capability and the technology that allow the banks to extract value and the information. But more important now, the key element is the capability to analyze this data. So the data analytics become the enabler to decrypt the pattern of how the customers behave in interacting with the financial institution. So players can generate engagement by develop technological capability, develop ability in offer disruptive customer experience, but the player that really can succeed and how we display in this matrix where there are 4 quadrants, and when we put together on the X and the Y axis, as we said, the technology capability and the customer experience, we can create the quadrant when we can focus on the engagers, who are the players at the moment in the market that are able to really combine the value of a tailored experience, focusing on user experience and user interface, but also the capabilities of extract value, analyzing the data. The combination of both dimensions really can create the base to have new engagers can absolutely have the opportunity grow customers that are more loyal and trust to the brand at the end. Looking at a survey that we did with some of the players in the market, we surveyed internationally some players who regularly use insight-driven customer engagement and they use data analytic. And what we discovered that there is a lot room for growth in this space, because 50% of the players that are in the market nowadays just use data, internal data, rather than aggregate more data from open banking or open finance. Depends from the geography that we are pointing at. And more interesting is the possibility to explore insights towards businesses. Just 26% of the players nowadays are able to propose insights based on the data for this segment. So most of the business of financial intermediaries, banking in particular, are in this moment in their development plan focusing on small and medium enterprise. There's a lot of opportunity there, and we suggest to focus on this target for sure. And last but not least, we noticed that the insight collected from the data are more related to general suggestion rather than specific product. There's room for suggestion on investments. Just only 33% of the players gave suggestions on this area. So we believe that the area of asset wealth management and investment in general could be absolutely developed, and there is room to become the maturity of this space.
Thank you, Marco. So I'm going to try now to shed some light on, first of all, how to generate the type of engagement Marco has been showing us, telling us. And then I will try to go through the report that together with PwC we built that Marco just gave us a very good extra abstract on. So trying to show you how actually use cases can be created and what actually is happening into the reality. So how does the process of building customer engagement work? Actually, everything starts from data. So we need to have an effective data collections process. So we need to start leveraging, as Marco said, data that we have in-house. Every financial institution have to leverage in-house data, but we have to consider the growing trend of open banking. Still, we see that open banking is dramatically skyrocketing in terms of adoptions. We see figures that shows us that there is a 50% year-on-year increase on open banking adoption. Once, after having aggregated data, we need to start enriching the data, meaning we need to clean the data, categorize the data, and enrich the data. This is a clear trend. 70% of institutions according to reports, are actually leveraging data analytics and machine learning technology. After having enriched the data, we have to create personalization. Customers expect personalization. The same way we access Netflix, we access social network, we access Instagram, we expect to have a personalized experience that is tailored according to our needs, according to our real behavior. And this has to happen also in financial institutions. Financial institutions cannot stay aside of this. How does this work? We need to think that we need to shift from simple communication to engagement. There are 4 ways we think actually that engagement should happen. First, bank need to alert, need to remind customers around which are the core events, the core banking events that are actually happening. The second thing is banks should advise. So a bank should inform about the financial wellness status, thinking about, caring about, suggesting the user about being virtuous effectiveness in the spending behavior. Then banks should connect, so suggesting connection of party providers of additional data. And last but not least, we should think about conversion from the bank perspective. So suggesting the right product, suggesting the best fitting product to satisfy the needs of the customer. We need to think, of course, that for each of these journey, we have to think that, as we said, there are different behaviors, different that are related to different type of customers. Which are these type of customers? Well, there are plenty of them. All of us in this room have different behaviors. There are Gen Z, there are families, there are mass clients, there are affluent clients, there are wealth clients, and then there are business clients, small business or corporates. All of these clients have different needs since they have different behavior. Therefore, each journey has to be different from the others. So each customer will likely need a real-time based communication according to his specific behavior. Of course, the end benefit for the bank is to have, a real engagement with the clients that will increase his customer engagement, bringing a longer lifetime value, and therefore a better engagement, and therefore more revenues thanks to this better engagement. Which are these use cases? We actually believe that we need to take into account what Marco was saying at the very beginning, meaning the first thing, we need to exploit open banking data to build effective use cases. Which are these use cases? The first one is we need to help a Gen Z client like Lucy that actually wants to be more close to his expenses. She needs to have more control of their expenses. These expenses can be subscriptions or utilities. So I, as a Gen Z, will have a plenty of expenses. I will have Netflix, I will have Amazon Prime. So I will want to have a better control on these expenses. So my bank will actually trigger me insights about these specific subscriptions I'm having. My bank will also be suggesting me rationalization of these expenses or better payment methods with a new credit card or to switch provider thanks to new cashback offers. The outcome, of course, is that Lucy will also feel more appreciated the way she suggested a better financial wellness. Another type of use case is that we can use raw open banking data to create new use cases such as carbon footprint score. So we can take transactional data and translate it into CO2 emissions. This CO2 emission will give me, as Greg, as a customer, an idea of how my lifestyle is impacting directly the environment in terms of CO2 emissions. We actually, as a bank, will be promoting a more sustainable lifestyle by suggesting the end customer how actually they are using their expenses in generating emissions. Of course, the bank will not only have a return in terms of awareness, but will also be able to suggest the customer to offset transactions in order to become a carbon neutral individual. We all see climate changes, unfortunately. We see pretty dry and hot weather in these days. Therefore, banks has to be the first promoter in promoting a more sustainable lifestyle of each of us. Going ahead, we can also use data to support underserved segments. An underserved segment, we typically believe it's small business and freelancers. These individuals have different needs than a retail customer. The first thing we need to take into account is that a small business, an individual, needs to take into account his cash flow. Why is it so important? Inflation is rising, we just got out of pandemic, labor costs increasing, prices skyrocketing. So taking into account cash flow generation is crucial. How can we take into account, how can Marcus, a freelancer, take into account his cash flow generation? By using transactional data, but also ERP data. So ingesting open finance data, such as invoices and bills, will give Marcus the fully capability to monitor his cash flow in the past, but also the generation in the future. Having said that, Marcus will see that he has a high variability in his income, and actually this variability has a negative trend. Therefore, he has a potential problem in the upcoming future by having upcoming payments he cannot face with the liquidity he has. So the bank, seeing this situation, is likely anticipating a potential problem he might have, offering him an overdraft by solving him a potential negative liquidity impact he might have in the future. Marcus, therefore, will have in his mobile banking app an open finance based tool that will allow him to solve his problem in advance. What other use cases can we see? Marco told us that there is a huge potential regarding investments, meaning still we see a lot of potential in suggesting customers that are not mandatory private and upper affluent clients that actually, so there is a big actually undercover potential in suggesting mass and retail clients micro investment based use cases. Let us do an example of how these insights based wealth use cases could work. We have Monica that actually is a renovation lover, meaning she received multiple incomes. These incomes are detected via transactions. So we see that she has multiple incomes. Therefore, the banks suggest Monica to invest more money, having a more regular income thanks to additional investments she will be able to do. Monica, therefore, starts investing by creating a new product, a new virtual wallet that she's actually able to manage thanks to our mobile banking app. These were use cases that we as Strands together with PwC think that can solve some of the potential we see to free a new form of customer engagement. But going deep into the report that we actually built together with PwC, we see there are 4 dimensions that we have seen analyzing top-tier institutions across a European level. First thing is, how are these institutions leveraging data sources? We see from this graph that everybody starts using transactional data, meaning insights start from transactions. But not all of the institutions work with personal data, meaning customer profile and other type of data regarding my behavior in the purchases I did with my bank. Even less institutions do not leverage additional type of data to have a more profiled communication, meaning banks do not leverage risk data, credit scoring based data, other type of credit worthiness data, nor third-party data such as open banking, open finance, nor additional ERP data. So we see actually that there is exploitable potential by using this additional type of data that still are not used. Going ahead to the second dimension, we see that also the way banks try to interact by suggesting the next best action, we believe there is a big margin of improvement. Meaning, we see that banks, first of all, try to suggest the purchase of a product. So, of course, 80% of the bank as next best action suggests to purchase a banking product. Or 50% suggest to pay in installments a purchase that has recently been done. This is, of course, intuitive, considering also the big BNPL, buy now, pay later trend we see, and considering also, as we said before, increases in prices. So banks, of course, try to take into account the increasing living costs by suggesting credit-based, loan-based, installment-based use cases. Still, only 50%, as we said, suggest the opening of an investment account. Something we see here is interesting, is actually what we don't see, meaning none of the banks is suggesting to have money management-based use cases, meaning next best action shouldn't be only about buying, about purchasing, but it should also be about having a suggestion, an advice, about having a budget, suggesting a review of my spending behavior, or even more, having a hand in trying to save more by setting a budget, by having a saving goal, by considering my real behavior. This is actually something I was expecting to see in this chart. What about the feedback? What about the customer feedback? Actually, we see that not all of the bank take into account the interactions, that customer are having with the insights, meaning only 50% of the bank actually send communication, and this communication feedback is taken into account. Only 40% of this 50% actually use this feedback received by the customer to have a better second iteration, having a better customer engagement in the future. Actually, this is counterintuitive, meaning every time we interact on digital channels, our interactions are taken into account for the second interactions, right? So if we don't see a video, if we see a video, if we like that video, this behavior is taken into account in the second interaction. We strongly recommend actually that this type of interaction should be taken into account also within financial service interaction. There is a last dimension, is everything we said is based on technology. We understand that, we learned that there is a lot of technology behind this, the building of these use cases. It was said about machine learning. It is said about, we didn't talk about software as a service, but we always talk about software, right? How do banks actually try to get hands on this technology? Typically, we see that 70% of the interviewed institutions rely on fintechs. The first role of fintech is to build technology. This technology is then purchased by bank. Therefore, incumbent traditional bank, commercial banks, credit unions, or other type of institutions leverage on fintech technology to build these use cases. What actually is interesting is that only 40% of the banks that uses the fintech technology rely on the customer journey and on the front end, on the user interface that is built is designed by the fintech itself. It means that actually bank rely on the fintech technology, but in the end they decide to give a different flavor, a different use case to that technology. Our opinion is actually that as a fintech, we build the technology, and of course it's the first reason to to buy fintech technology. But we also believe that being, let me say, somehow the expert of this technology, front end should be maybe taken a bit more into account while building new use cases. Of course, UI will be, user interface will be the bank interface in the end. There is another very interesting takeaway we saw from this report. Looking at this graph, which looks really complex, actually, we believe that there are two big clusters of clients, first of all. We see the gray shade is the retail customer. And then we see the blue shade are the business customer. We've been analyzing these two big clusters of clients of the banks we've interviewed. And there are some interesting takeaways I would like to share with you. The first thing we see from this spider is that basically all the banks focus the interaction on trying to convert and to convert on credit and or loans. Meaning banks, when offering a use case based on insight, they point actually in offering a credit or a loan. This makes sense, first of all, because we just, as we said, we got out of pandemia, we have booming of expenses, therefore liquidity is a hot topic, of course. But what we see actually is that not all of the banks are on the other side of the spider trying to boost actions, suggestions, meaning we are not helping really fully exploiting full potential of money management based use cases, such as supporting cash flow analysis. We actually see that business customer, there's a huge potential in offering cash flow based use cases. Or another takeaway is that we see that also the suggestion of setting budget, suggesting spending limits, generating reports to support retail customer in having a better understanding of our finances and a better support in having a more healthy financial wellness is not fully exploited. Actually, we see that less than 20% of banks actually leverage these type of use cases for retail customers. There is an even higher margin of growth for business customers, meaning we see that money management-based solutions still are underrated, underpenetrated, let me say, for business customers. Another very important takeaway is that the connect part is still underpenetrated, meaning using additional data sources, such as using credit parameters or other type of data sources. There's still a lot of room of improvement. So the general takeaway here is actually that there's a lot of margin of improvement. What we would like to see, imagining having this session in a couple of years of now, is how about actually seeing this spider far more wide. I take the chance here, guys, if any of you has questions, if you like to have some deep dive on something specific, you can use anytime the chat. You will find right bottom that you will be able to enter questions, and we would be glad to answer you these questions at the very end of the session, myself, Marco, or Enrico. So, having seen this analysis, what is the general takeaway? Just to recap in a nutshell, we see that financial institution and incumbent point a lot on credit loan-based use cases. We believe there is still a lot of room of improvement for different type of use cases for retail mass market. Still, we understand, of course, that this is also loan and credit have still high profitability, and the market actually is demanding this type of use case. Another thing is that, of course, we see a lot of improvements in the financial wellness arena, right? So suggesting more healthy spending behavior, suggesting helping the customer with budgeting, saving goal-based use cases. We believe this is something that incumbent should take into account, having therefore a closer relationship and a higher engagement with their customer. I would actually like to give back the ball to Marco to give us your point of view on what we actually saw around customer engagement in general, and how therefore banks, in your opinion, should go ahead having a different type of engagement.
Claudio, I believe we touched a lot of topics that are really need to be addressed by the banking industry. Financial institutions for sure can cover this aspect, working deep on customers' insights, and also create more value for their customer base and for businesses. Looking at the use cases that you also presented, for sure, our data and our experience confirm. We did a research about this, that 60% of the customers in the financial industry are willing to receive a personalized offer and use new digital platform which analyze their data if there's a concrete value for them and benefit that could be shared with them. So if the financial institution are not ready to collect the data and extract all the value for them, but also they are able to share this data, and I mean the value of this data with the customers, for sure, that's the base to create a more loyal customer base, and for sure to aim the reduction of churn rate and improve the customer lifetime value at the end. So I would like to say that the real engager are those institutions that are able to combine capabilities, as we discussed in terms of technology and user experience, and the ability to create new use cases that engage the customers along their lifetime, and I mean the lifetime of the customer. So at the end of the day, that's a room for banks in this moment to move in from the digitalization to the personalization as the new era of the evolution of the digital banking in general.
Thank you, Marco. What do you think, actually, Enrico? What actually is your personal takeaway, and what actually do you think should fintech and other institutions do in order to support Marco's point of view?
Thank you, Claudio. It's almost 30 years that I'm engaged with the data-driven industry. And I would say that based on the assessment and analysis performed by PwC and the way in which Strands has been shaping the offering, there are these four pieces of differentiators that might make the difference. Number one is the analytical capabilities that now are very much available also in terms of machine learning and artificial intelligence serving the purpose of engaging customers. The fact that there are there is a lot of flexibility in developing, testing, and deploying insights. No code as in the past is anymore necessary. The availability on-prem and in cloud as a service is something that makes it easier for financial institutions and other players to utilize these capabilities. And last but not least, these capabilities are gonna serve both the retail and the micro, small, and medium enterprise segments. My point is that across 30 years have been cycles of financial institutions, but not only financial institutions, also insurance companies and multi-utilities, trying to address the question, how can I create and deliver value to my retail and business customer base, making money and in an industrialized way. I mean, a way where we do approach the general customer base, not such specific subsegments. As we have seen in this presentation, there are 4 phases: alert, advise, connect, and convert. In my experience, my observation across these almost 30 years is that this was also related to the technological burdens that were there till a few years ago. The financial institutions, insurance companies, and multi-utilities, they were mainly focusing on the alert and convert. They were less involved in the advice and connect. It is clear that if you do not warm up the relationship with your customer base with the right advice and the right way to connect with them, even if you are able to identify which are the right issues they have to fix, your customer has to fix, the conversion is not so strong. Now, and that's the great news we have seen also in this quick presentation, we have all the elements available in the chain alert, advise, connect, and convert to really deliver real-time next best action or offer to individuals, retail customers, and micro, small, and medium entrepreneurs. This is an asset which is really available in a way that also allows the dissemination of the financial management culture, which is the other piece behind, a proper way to advise and connect with my customer base as a financial institution, insurance company, or multi-utility. So that's my takeaway. There are now all the ingredients available to really create and deliver value by the financial institution and the other players to their customer base. That's my takeaway. Thank you.
Thank you, Enrico. Thank you, Marco. I see we have one question here. First of all, I read it. Is it possible to create different insights than the ones you share to customize the journey for small, medium enterprises customers, for instance? Everything we showed you today from my side in terms of user journeys are based on Strands capabilities, first of all, meaning everything you see is being made available by our technology. Our technology is flexible in the sense that we allow the creation of different insights, different use cases, thanks to an engine that actually allows to create insights, no code, meaning we have a back office console that supports the creation and the generation of all these insights. These insights are then available, are then tailored to the specific customer typology, we're talking to. Therefore, we're able to build different use cases for small, medium enterprises. We can think of additional use cases based on invoices, so suggesting the small, medium business customer if invoices are not paid, if invoices are being paid, what's the impact on the cash flow, what has been the cash flow generated within the last month. Just to give you another figure, we see that insight-based communication have up to 95% of interaction, meaning every 10 insights generated, more than 9 customers interact with them. This is actually, to us, an incredible result. And this actually answers the question of, yes, they can be and they have to be tailored according to the specific customer. The second question we see here is this journey a wheel we start over and over, or can we combine the different insights from other connect, advise, and convert? I will try to answer. I actually believe that we do not have to think of those 4 dimensions as separate blocks, separate pillars. They are part of a unique journey. The type of relationship a bank should establish with its customer is a sort of journey, is a real journey, not a customer journey, but a journey, meaning we need to have a constant relationship having different type of interactions. Therefore, banks should start having an alerting-based communication, evolving into an advice and a connect, and finally into a conversion stage. So having a sort of relationship that is built on trust.
If I may add, Claudio, on this, 15, 20 years ago, a lot of financial institutions across Europe, for example, they were focusing very much on creating an alert-based system. No? So huge investment in CRM building from a technological point of view, huge amount of money spent. But indeed, if you spend money on this single block, not seeing the journey you said in terms of from alerting to advice, from advice to connection with customers, which generates the conversion, you are losing time. And that's the point. This is the real change in place nowadays. We can play this journey, putting together these 4 phases in one single project. It has been enabled by technology. True, that's true. The technology now allows it. So take advantage of it. If still 50% of banks, as it comes out from the survey, are not fully utilizing the information available to build up a journey with their customer base, now is something that can be easily solved. It's not needed to spend 3 years in a technological infrastructural investment. Open banking is there, so it's time to take advantage. And it's a journey. These 4 pieces are part of one single journey, are not 4 separate pillars. Not anymore, luckily.
Enrico, Claudio, let me add one comment about this also in the light of covering another question that comes. Just to link the question on open banking and also what you said. As PwC, we believe that nowadays there's room of opportunities for financial institutions, as you said, and the financial institution have not to reinvent the wheel. Instead of making a lot of investments and investment in technology and in capability, for sure they can rely on a trusted platform on the market And for sure, if we add in the long period the data available from open banking and open finance, so the openness to other industry, and as in the other geography we already saw, data extracted not from the financial services sector, but from other sector, we have a more complicated range of data, set of data that have to be analyzed, crunched, and also identify pattern and correlation among these data. So at the end of the day, instead of pushing investments in recreate personalized and customized infrastructure, it's better to use what is already on the market, leverage on this, and in some case ask for some personalization for sure, in order to better customize the offering and combine the offering of the bank with the service. But at the end of the day, it's time to act rather than to build. And the opportunity is there, and for sure in the future, we see more customers asking for more bespoke experience.
Thank you. I see our two questions. The first one is, how can I go beyond traditional segmentation? I believe part of the answer relies in what was just said. Segmentation exists since years already, as it was shown, but I believe also using additional type of data sources is definitely one of the things that can help us push segmentation a bit beyond, right? Having therefore additional type of data, mixing this type of data can for sure help us go a bit beyond the traditional segmentation.
If I may add, Claudio, on this, I saw recently the amazing results from job delivery that Strands made with one of the tier 1 European financial institutions, where, for example, categorizing data, utilizing the hybrid model, which is traditional rule-based and machine learning, created a variety of new categories that was even unknown before starting this categorization exercise. Yes.
That exercise, if I'm not wrong, led to 12% of increased conversion rates on insight-based journeys, meaning by using evolved data enrichment based on hyper-segmentation, hyper-personalization, actually showed that can lead also to better results in terms of conversion and therefore having far better cross-selling at the end of the day, because we all know that it's all about generating business impact. The last question is how open finance and open banking can affect the future of this journey. I will let you, maybe Marco, as open banking expert in open finance, answer this question.
We already tackled these questions in part and already covered. For sure, the next frontier for the banking industry is to look at this other opportunity. As we said, the financial industry already look at inner instead of looking outside and identify opportunity related to the data of our industry, was not so able to exchange and mutually receive data from other industry and use it to create a better pattern. For sure, the banking industry already concentrated on the usage of the risk, looking at the data and extrapolate this information in order to produce better service for their business. That is the first topic that is not to forget in the future. But for sure, other pattern could be discovered, understanding how the customers move, pay, use other product, in general, relate with the rest of the society, in the digital society, and his experience on the web in general. This information now are available. Open Finance will give the banks the opportunity to transform their business from pure financial services product driven industry to a more data driven industry. That's why the engagement and the use of the data has become key in this moment.
Thank you, Marco. I believe time is over. We had a lot of questions, great speakers today. I would like to take the chance actually to remind 2 call to action, guys, for you all. Thank you for joining, of course. After this session, you will receive a mail and you will definitely be able to download the report. We suggest you to read it, to go through it. There are a lot of figures that actually go deeper in explaining everything we've discussed so far today. And the second call to action is feel free to contact us, guys. If you have any additional questions, if you'd like to see additional use cases, write us at field@strands.com. You can shoot us any questions. I will be glad to shoot you a demo and show you something even more deep and understand together how to build customer engagement that actually leverages open finance and insight-driven engagement. Thank you, everyone. Have a lovely day and goodbye.